by EFT. You can use one of two source documents. We can say EFT. Normally in a business there will be a document which we complete to actually indicate or to approve a EFT payment. But in this case, we don't know what that document is, or else we would also see it on the bank statement. I would think the more correct one of the two would be a EFT, but bank statement also would be accepted. What journal did we put it on? We paid CPJ. Okay, now we've got to follow our steps to complete or to be able to complete the transaction. So it's number 3. We said it's on a CPJ, which means one account must be bank. Bank is an asset. We paid some money, so we'll have less assets, which means we're going to credit assets, credit bank. What is it that we're paying for? For the owner's son's school fees. Anything to do with the owner, we put to drawings. So if we pay his insurance or his school fees or whatever, doesn't matter, it is drawings. As soon as you see that we're paying something for the owner, you make that drawings. There's an owner's equity account. If he's had some drawings, took money out, it means he'll have less capital. What side do we make capital less? On the debit side, or owner's equity. So we set debit owner's equity, credit bank, or debit drawings, credit bank. Now we can fill that in. Debit drawings, credit bank. Let's go back and see. It was assets minus owner's equity minus assets minus. What was the amount? Go back to the question. 1,900 minus 1,900. Let's just fix it. Okay, minus 1,900, and we also said owner's equity gets less, so it's also minus 1,900. So we've done number 3. Now we can look at the 4th transaction. A debtor owes 250 Rand. Check of 250 received. Don't just look at the word check and say, well, check is CPJ. If we receive a check, it means it is a CRJ. So a check was received from the debtor in settlement of his account. Okay, but the check was for 230. So, and he owed us 250, but the word settlement tells me whatever he pays is settling that amount. So after that payment, he owes me nothing. But if I look at, there's a difference of 20 Rand. 250 minus the amount that he paid is 20 Rand. That 20 Rand is discount. So number 4 will be 2 parts. One part for the amount that we received and one part for the discount. So let's first look at follow the steps. So it's number 4. If we receive money, we receive a check, it means it's a CRJ. Good. Let's first look at the normal part. CRJ, one account, always bank. Bank is an asset. We received money, so we will have more in the bank, more assets, and that means we make assets more on the debit side. What is it that we receive? Somebody that pays his account. Somebody that has an account with us, we call a debtor. So it is debtor's control. Anytime when they talk about a person paying an account or settling an account or anything to do with account, will be a debtor. If we pay something, it is a creditor, but in this case, it's a debtor. Debtor is somebody that owes us money. He's going to pay us at a later stage, so we're going to get money at a later stage, which makes him an asset. If he pays some money, he will owe us less. We will make a debtor less on the credit side. But that is now just the first part of it. Remember, that is for the 230 that he paid. But he owed 250, so that other 20 rand I said is discount. So we must do something about the discount. If we give somebody discount, we call it discount allowed. It's costing us, so it's an expense. We have to pay out more expenses, so we'll have more expenses. The discount is costing us more. What side do we make expenses more? On the debit side. Who are we giving the discount to? A debtor. So the other account will be debtor's control. We said debtor's control is an asset. If we give somebody discount, will he owe us more or less? He's going to owe me less. And we make an asset less on the credit side. So we've got two transactions to post here. Let's go back to our answer sheet. So the first one would be the source document. He paid us money. What will we give him if he pays us money? A receipt. But if we issue a document, we give the person the original and we keep a duplicate. So it will be duplicate receipt. What is the journal? We receive money, CRJ. Our first part. Let's go back to our calculation. First part was bank debit, debtors control credit. So bank debit, debtors control credit. What is the amount that we actually receive? 230. So it is 230 rand. Let's just make sure. I said both are assets. It's plus and minus because the bank gets more, the debtor less, and they're both assets. So it's plus 230 and minus 230. Plus 230 and minus 230, both under the asset column. Okay, but I said there's a second part, the part for the discount, so let's just move down. Discount allowed, debit, debtors control credit. So discount allowed, debit, and debtors control credit. Let's look at what discount allowed is an expense. I've got more expenses. If I go back to where does expenses come in? With the profit. More expenses means less profit, means less equity. So owners, although it's more there, it is less equity for the owner. So the owner's equity will become less. But now only for the discount part, which was the difference between the 250 and the 230, which is 20 rand. So my owner's equity will become less with that 20 rand. Also said asset minus, so under assets minus 20 rand. So if I look in total, debtors paid 230, discount 20. The 2 in total should give me what he owed, which was the 250 rand. Let's look at number 5. Pay 50 Rand paid out of petty cash. The word petty cash should tell us it is the petty cash journal. So it is 50 Rand paid out of petty cash for stationery. Let's quickly follow our steps. So it's number 5. Anything we pay out of petty cash goes onto the petty cash journal, the PCJ. PCJ, one account, always petty cash. What is it that we're paying for? Stationery. Stationery. So the other account will be stationery. Okay, let's go back to petty cash. What is petty cash? It is money that we've got in the tin. So it is money that we can use at any stage. So it's an asset. We paid some money out of it, so we'll have less left. We make an asset less on the credit side. Stationery, it's costing us money, it's an expense. We paid for some stationery, so we've got more expenses. We make expenses more on the debit side. So it is stationery debit, petty cash credit. Let's go to what is the source document? What document do we issue for the petty cash? Anything we pay out of the petty cash, we use a petty cash voucher. So the source document will be a petty cash voucher. The journal is the petty cash journal. I said debit stationery, credit petty cash. So stationery, debit, and petty cash credit. Amount, the amount 50 Rand. And it is assets minus. First, let's put in the asset. So it is minus 50 Rand. And expenses gets more expenses, less profit, less equity. So owner's equity will get less. So it is minus 50 under owner's equity. Let's look at number 6. Number 6, pay for carriage of goods bought by check. Carriage means it is the delivery of the goods. Any expense to get the goods to us form part of the cost of the goods. Goods, what is goods? Trading stock. So any cost to get the trading stock to us is also part of the cost of trading stock. So carriage on goods account will be trading stock. And it is paid CPJ. Let's do the steps. So it's number 6. It is a CPJ because we pay. One account, always bank on the CPJ. Bank is an asset. We paid out some money, so we'll have less assets. We make an asset less on the credit side. What is it that we're paying for? Trading stock. Trading, because it's the delivery cost to get the goods to us, forms part of the cost of the goods, and goods we call trading stock. Also an asset, we can sell it in future. We got some more stock in, so we'll have more assets on the debit side. Good, now we can go to the analysis. It's we paid for it by check. Keep the check counterfoil. Check counterfoil. It's a CPJ because we paid some money.